crypto really needs to go global for us to achieve anything in this world. And one of the industries that crypto is revolutionizing is of course the finance industry. It's one of the many, but the finance industry is the first one and the most obvious one that we are tackling right now. That being said, we do have a wonderful panel coming up discussing this very topic, how crypto is disrupting and will disrupt financial industries. And the panelists are the following: Mike Kayamori, co-founder and CEO of Liquid. Then we have Bobby Bao, co-founder of Crypto.com. Jeremy Allaire, CEO of Circle. Roland Schwinn, managing director of Signum. And the moderator is Gerald Chi, head of research at CoinMarketCap. A big, big applause for our panel.
Well, good morning, ladies and gentlemen. Well, it has been our pleasure to host you all at our inaugural conference, and I hope you all have learned much from the speakers before. Well, so just a little side note, please go to sli.do/coinmarketcap to fill in any questions that you have for our panelists. Right, so for the very first panel of our event, we have gathered with us 5 leaders of exceptional businesses in our crypto industry. And they have come to share with us their thoughts on the role of crypto, its future implications, and even its potential for disruption in the larger financial industry. As an industry, I think we have all certainly grown very rapidly since the creation of Bitcoin 10 years ago. We have experienced multiple boom and bust cycles, and with it comes an evolution of the role cryptocurrency play in the world. New ideas, products, and trends surface every day in the industry. But one segment stands out amongst the rest. The financial applications of cryptocurrencies are all for there to see, from increasing interest in derivatives markets to simple provision of financial service like savings and loans. In today's panel, we hope to discuss how the role of crypto could evolve next and the barriers for what we call mass adoption. Next, we'll discuss the product offerings in the crypto space and whether regulation is an important part of the puzzle. Lastly, if time permits, we could even discuss if there is a potential arms race in the blockchain or crypto industry between the 2 largest economies in the world. Well, we have with us today Jeremy Allaire, co-founder and CEO of Circle. Matthew Rozek, co-founder and chairman of Block. Roland Schwinn, managing director and head of business development, Signum. Bobby Bao, co-founder and head of corporate development, Crypto.com. Mike Kayamori, co-founder and CEO, Liquid. Without further ado, let me invite our panelists to give a short introduction about themselves and about the companies that they represent and how they are positioned within the industry and what their focus is for the next year. Please, Jeremy.
Great. Thanks so much. Jeremy Allaire, co-founder and CEO of Circle. We started Circle about 6 years ago, really with an interest in sort of how we could layer traditional financial services on top of open public blockchain infrastructure. Over the years, we've had retail payment products, investment products, institutional products like institutional trading services with Circle Trade. We bought and then recently spun out a crypto exchange, Poloniex, and 2 of the things that we're very focused on right now. One is scaling out stablecoins as a general purpose infrastructure for not just payments and settlement, but as a kind of base layer for a wide range of other types of financial contracts that can be built on blockchains. And then another business, which is a fundraising platform and a broker-dealer that we operate, really trying to now actually take real financial contracts, whether they be forms of equity or debt or lending or tokenization of property, and and actually move those to on-chain infrastructure combined with stablecoins. So that's a little bit about Circle.
Hi, Matthew Rozek, Chairman of Block. I think you gotta use this. Hello. All right, good morning. And co-founded Block with my dear friend Jeff Garzik, who was a Bitcoin core developer back in the day. So it literally went from Satoshi to Gavin to Jeff in the earliest days of Bitcoin. And so we're a software company, and we build software for tokenized networks, so wallets, nodes, index data, a lot of the infrastructure for engaging in these tokenized networks. So our customers are exchanges, wallets, protocols, and kind of developing this Twilio, if you will, for blockchain. So being able to talk to multiple protocols, multiple railroads, and do that seamlessly for developers, taking a lot of cost out and having them focus on the things they need to focus on. And that's delivered through Block Enterprise. Through Block Labs, that's where we innovate. We build new tokenized networks and platforms. So about a year ago, we built Metronome, a new cryptocurrency. It's autonomous. It runs on its own. It's the only DAO out there after the DAO, which is kind of unique and it's kind of scary to build, but it works, and we're very proud of it. Earlier this year, we launched Veriblock, which uses Bitcoin security as a service to help you underpin your blockchain using Bitcoin security. And currently, we're launching and going to market with Titan, which is a mining management software company that you'll hear about a little bit more today. So we're builders, we're innovators. There's a lot to build in this space. I feel like we're still in the stone ages of crypto, and we've got a lot of work to do, and so we're engaged in doing exactly that.
Hello everyone, my name is Roland Schwind from Signum. Signum is the first fully licensed digital asset bank to serve digital assets, providing bank accounts, wallets, settlement, and trading and custody. I'm part of the Singapore team where we run our asset management. And we just received our CMS license from MS for fund management here. My background is exchange, derivatives exchange, trading and clearing, where I spent half of my lifetime, and also went into cryptos and blockchain 5 years ago.
Hello everyone, my name is Bobby. I'm a co-founder from Crypto.com. We co-founded a company in 2016, headquartered in Hong Kong. Crypto.com is a cryptocurrency and a payment platform. Our portfolio products including Fair Crypto Wallet, where you can buy cryptocurrency like Bitcoin at true cost. We have a Visa card. You can spend a cryptocurrency anywhere Visa accepted, and meanwhile earn up to 5% cryptocurrency cashback. We also offer collateral lending and staking business to our users, and as well as we give user to make payments through the QR code payment. So you guys can think us as a cryptocurrency bank for the users. I think in the coming future, we will continue to spend effort and time on improving two things. One is the user experience of our app. The second thing is to give the users more incentive to use our products.
My name is Mike Kayamori. I'm the co-founder, CEO of Liquid. We started out in 2014, so that was 5 years ago, in Singapore. So proudly being a startup founded here. But then we moved our headquarters to Japan. And that was 2016 because the Japanese government passed the first crypto legislation at the time. So we are the first global exchange to be licensed and regulated under the Japan FSA regulation. And so we've been pro-regulation from day one, because in 2014, there was no Ethereum. There was no ERC20, there was no token economy, it was only Bitcoin. So as an exchange, we had to work with banks, we had to offer fiat. So that's our heritage, and that's in our DNA. Obviously, in the past 5 years, things have really evolved. There's margin products, leverage products. You see a lot of people migrating into futures. You see a lot of tokens from utilities to security tokens. My concern is that the regulation side is not catching up. And as a pro-regulatory exchange, we're feeling that pain and difficulty as we speak. That said, I think there's an unbelievable opportunity in this space. It's just going to have a lot of challenges to go through.
Right, awesome. So I think to solve the whole question about mass adoption, everyone's been talking about mass adoption. Let me ask Mike to start off the ball rolling. So in your view, what do you think is the biggest roadblock for mass adoption? Is it regulation? Is it education? Or is it the user experience in terms of sending Bitcoin, receiving Bitcoin, and so on? So given these three, if you were to choose, which would it be and why?
I mean, it's all of that, but if I were to choose, again, today, I would have thought a little differently 6 months ago, because at the time I was in conferences, I would be talking about the golden age of crypto was coming, and that was when Facebook's Libra people were excited about that, when Telegram was talking about their Gram token in mainnet. So a lot of excitement, and yeah, if the Libra thing happened, that would be 2.4 billion users, right? And especially in markets where their access to financial services are difficult. So to me, that was almost a great opportunity for mass adoption. And I'm not saying Libra is killed, but it's going to be delayed, and there's no end in sight. From that perspective, I would say regulation is one of the biggest challenges for mass adoption.
I would say regulation is definitely the biggest factor to improve the mass adoption of cryptocurrency or blockchain technology, right? You can take Facebook as Libra project as the best example to illustrate, right? Given Facebook is the world leading technology company with with so much amount of data, healthy balance sheet, technology, still, take the CEO of Facebook, rounds of regulation hearing in the U.S. in D.C., right? So you can feel it. It's the regulation is the biggest factor at the moment. I mean, this year, next year, or the year after.
Yeah, I agree with all of you, but in addition to that, for me also very important is that we need trusted counterparties to deal with. Even in the world of blockchain, where a lot of trust is taken by the protocols, we still need trusted counterparties. If I trade with Mike, I want to make sure I get my money out, right? Another thing is, I think from a retail mass adoption, I think that people on the street really need to see at one point in time real use cases generating value in their daily life. So it's not about becoming a family of some community when I buy the token. I think it's not strong enough, use cases like that, or just the trading as such. We need real value being generated out of tokens and out of cryptocurrencies.
Yeah, I mean, going down the line here, regulation is a big friction point. I feel like in many ways the boot of regulation is compressing the air hose in this ecosystem. I don't see a lot of light at the end of the tunnel here over the near term in the U.S. In many ways, it's like a flyover country between Zug and Singapore. It's just being very matter of fact. And the U.S. has got so many advantages between Wall Street, Silicon Valley, IP, jobs, innovation, funding, capital formation. And it's kind of missing the boat at the current state, and it's a lot of people that are making decisions aren't innovators. Regulators are not innovators, and so I think some of this is going to be drawn more towards the use cases, because if you find great use cases and mass adoption of those use cases and utility and value there, I think the pressure on regulators gets even higher. I mean, right now the pressure on regulators is capital formation in crypto in the U.S. is a tough road, and so you wind up getting on planes to jurisdictions where it is a lot clearer, and then you do get the capital formation. And what's interesting about this space is entrepreneurs are super more conducive to forklift themselves and teams and go to the Caymans and Switzerland and Singapore much more than any other tech genre I've seen in my career. And so I think that's going to continue until we get a break in the U.S. and there's some clarity, an aha moment, and I think that's still going to take time. That's nowhere in the near term. And I think the regulatory arbitrage that we're seeing in other areas will help folks in DC and elsewhere sit up straighter in their chair. I think the Libra conversation was a good stimulant to that, but there's a lot more work to do.
Happy to echo some of the things that have been shared. I think I'd focus in, from our vantage point, I think what got a lot of us excited about the space was the idea that we would have, permissionless networks where value exchange could happen in the same way that permissionless networks allowed us to have information exchange and communications and content publishing on the open internet. And the appeal of that happening with value and money is sort of irresistible. I think that's what brought many of us into this industry. And I think we've only just now gotten to a place where fundamental utility value in economic activity can actually happen. Libra is an indicator there. I mean, I think if mass adoption, we mean like everyone's using a non-sovereign money instead of their own sovereign money, I think that is going to be quite some time. But as mass adoption of people are allocating some investment into digital commodity money, that could be larger and larger. But that's still not, I think, for me at least, why I'm interested in this in the problem space in the industry. To me, mass adoption is that hundreds of millions of people are using public blockchains as a way to settle transactions and participate in economic arrangements, and where tokenized fiat is happening en masse for people. They don't really care, just like we don't care that SMTP is how our emails get routed around, or VoIP is how we're having these video chats between different devices. I don't think people really care whether they're using blockchain or not, but they are interested in having open, connected infrastructure where they can have value exchange with the same seamlessness that they have information exchange today. And so there are technical constraints. Blockchains don't actually perform this today. Like on a decentralized basis, there are no decentralized blockchains that can support hundreds of millions of people today. And then the seamlessness, like real seamless on and off ramps between the existing central bank money systems and public chains, there's just radically too much friction there. That is a regulatory issue, and it's also a risk management issue. And I think those are huge impediments as well, because basically the interface layer between public chains and central bank money, effectively you have a set of friction that's more like opening a brokerage account as opposed to the kinds of payment app experiences that we have in the world more broadly.
Very good. Yeah. So I think this kind of highlights one question that one of our Slido users kind of raised. Could you define mass adoption? Like, I guess, Jeremy, you have defined it quite nicely in your own words. Could the rest of the speakers, starting from Matthew, define what you think when people say mass adoption? What does it mean to you as a business leader, right, in the space?
The future state is using these decentralized networks and the business coordination, getting rid of the friction of doing that. I think today it's still speculation in getting a bite of crypto in your portfolio and doing that seamlessly, doing that compliantly, that whole piece. And speculation and the capital formation to invest in this space today to build out that future is incredibly important, and so the mass adoption over the near term is going to be speculation, meaning get a bite of this new asset class, and we're as humans we're tribal. It's like if I told Jeremy like download Instagram, we could share our fancy like lunch pics or something. That's not a big deal. We'll do that. But if I say, hey, download this money app and house a part of your net worth in here, our trust bar kind of gets higher, and that's just how we're wired. And so I think the adoption of that just takes longer sometimes. But as the stories, the narratives, the tribes continue to share these stories and share this, I think that it's a slower adoption curve on a retail side. It was nice to see in 17, 18 where everybody was just like trying to make money and just like playing into that. That was a catalyst to get some adoption. but it was, a short fuse. I think the next one will be more fundamental, more like you should have a piece of this digital gold in your portfolio, period, full stop. And I think that and unpacking that as the starting point is really important, just as a kind of a root in this space.
I think when it comes to mass adoption, we need to also look at from several angles. So what is my motivation to participate in this? So will I just trade this for speculation? Will I invest in it on a long term? Or do I expect even more to get out of it, right? Real use cases generating value. And then we have the huge retail space, but we also have a huge not so visible buy-side space, so institutional investors. And this is at the end what we want to all to get in. But for that, again, we need trusted counterparties and other aspects we mentioned already, like regulation, etc. But the space of institutional investors, and I've seen the institutional adoption now happening for the last 5 years, but what I've seen so far mainly is trading and not so much investing. So I saw big prop trading firms that used to be my clients getting into crypto trading, and some of them now also have large OTC desks of them. And then you had high-frequency trading firms getting into it, and you had other market-making firms coming up. But from the real buy side, the real long-term capital, the smart capital, is not really in yet. This is a very tiny fraction. There's no empirics around that. We all know that. But from what I can tell from talks with market participants and also talks with asset managers, hedge funds, family offices, name it, it's still a tiny fraction. So they need trust, and they can only invest their money when the money will be the money of their clients will be safe. So I want to regulate exchanges. I want regulated custodians. I need regulated banks for doing that. Otherwise, I cannot invest as an asset manager the money of my clients. So I think this is all important for the mass adoption on the retail side, but also then in the institutional space. And that when it comes all together, it will feed each other.
Yeah, I think in my view, the mass adoption of blockchain technology is actually really happening. You can see after the Facebook Libra project in the U.S., after the chairman Xi in China mentioned blockchain technology. I mean, when I'm back to Shanghai or Beijing, right? Even my parents keep talking about blockchain. My grandmother talking about blockchain and mentioned, hey, Bobby, you are doing the blockchain business, right? So I feel the mass adoption of blockchain technology application is really happening this year. And I think the wave of more adoption of blockchain technology is the next 5 years. The most important thing, even, I mean, for China and the US, they're gonna put more money, efforts on, onto the application of blockchain technology. Right, I feel like blockchain technology mass adoption is actually happening right now. You can feel it, right? And whereas I feel like cryptocurrency is would become highly regulated financial assets, open to certain qualified investor to trade, to invest, right? That's my personal view.
So I have a different view because if it's qualified investors and accredited investors, that's not mass adoption in terms of cryptocurrency. So I think it differs by, I think from a mass awareness, it's already there. Right? Compared to 5 years ago when I started Liquid, or it was called Coin at the time, no one knew Bitcoin. But in a short period of 5 years, everybody has heard of Bitcoin. That's pretty amazing when you put it in context, because compared to gold, that's been in existence for 6,000 years, 7,000 years, Bitcoin is 10-year anniversary, right? And then Ethereum is 5 years. So when you look at that, and also because we're based in Asia, we see a lot of people signing up from emerging markets. The problem is if we put our, for example, Japanese best practices or the FATF best practices, we reject 80-90% of people from Indonesia because the proof of address, they cannot prove. They lived with their parents, they don't have their own utility bills, they're always prepaid, so they don't have anything to show that they prove their address. So unless those areas are resolved, there's no way for this to circulate, right? So And also, unless companies like Facebook or Telegram or are able to truly try and test it out, right? You cannot stop innovation before you actually allow it to test it. So unless that happens, especially in emerging markets, it's going to be very difficult for mass adoption in terms of I'm not talking about like institutional side adoption or trade finance or something like. I'm talking about more from a retail mass adoption. It's going to be difficult. That said, for example, in countries like Japan, there was a fascinating phenomenon in late 2017 when the price was going up. That's why I agree with Matthew that speculation is not a bad thing. It creates a lot of word of mouth when you go to bars. People will talk about Bitcoin. And that was when truly in Japan, cryptocurrency became social. People were talking about, I made money. And even when they lost money, they'll say, I lost money, haha, right? They'll take a snapshot of their portfolio and they'll post it on Instagram. You see like casual office ladies who will start talking about that. So that was an exciting period. Yeah, people say it was a tulip or like there was just hype curve and then it went down. But if there was a way to sustain that, the adoption or awareness was there. Adoption could have happened. And then people were starting to use that at Big Camera, which is similar to like Best Buy in the US, where you can pay with crypto. And people were doing that because they use it and the price goes up. So they were saying like, my account never goes down from a fiat perspective. I always use it, it goes up again, I always use it. Again, that was the good old days. But that's why I think those kind of the making it social, making it people excited, those things are what probably needs it. And we almost saw that coming like April, May, June this year. But it's kind of reverted back into kind of that, not crypto winter, but it's that kind of area right now, I think.
Well, it seems like it always goes like 3 steps forward, 2 steps back. You're always making incremental progress, but not the kind of leaps we'd want to have. Earliest days of Bitcoin is drug money. Then it was like, well, there was a crash, and we're all human. So people on the stage and then this audience, we kind of are crypto natives in many ways, but outside of us, talking to our neighbors and brothers and hairdressers or whatever, it's not as intuitive, and it's a lot scarier. And human nature kicks in, and you're like, well, what were the last few headlines? And there's a hack and this and that. And so, but every day it gets better. Exchanges get more secure, wallets are easier to use, and so it's an incremental kind of push. And we all want this vault into mass adoption. I think it's like a freight train. It just kind of like from a distance, it looks like it's just puttering along. If you get up close, it is actually moving pretty fast.
Mm-hmm. Right. So, for a kicking question, right? Do you see cryptocurrencies disrupting the financial industry, like the way Uber has disrupted the taxi industry, Netflix, the video rental industry, Amazon, retail, right? So, in terms of that vision of disruption of a larger industry, do you have a vision of how cryptocurrencies could change, evolve, or even disrupt at large this financial industry that hasn't been disrupted since it began?
Sure. I mean, I think that's why we're all here. But I think when you step back and you think about it, I think at a high level, we should be approaching a world where basically the value of payments goes to zero, that value exchange is free and ubiquitous in the same way that information exchange and access to content are just free utilities on the internet. Permissionless protocols and infrastructure, tokenization of fiat, and the adoption of that kind of infrastructure, it should get us to that place. So if you look at the financial industry, retail banking, about 50% of their profits actually comes from margin that they collect from essentially the operation of centralized electronic payment settlement schemes. So that should just go to zero. The business model payment should go to zero. I think that should be very impactful. And that's the distinction between sort of domestic payments, international payments, cross-border payments will just evaporate, and we'll just have, again, just like we have with information and content, the ability to move value that way. That all just seems really inevitable. It's sort of pick your time frame on that. And then I think the second piece is, I think what was really interesting about the ICO phenomenon and about what took place in 2017, early 2018 was we got a glimpse of what an internet-based capital market could look like. And we have these multi-sided marketplaces that exist in transportation, in food delivery, in information access, in advertising, in the ability of commerce platforms like Amazon and Alibaba to bring together very, very long tails of market participants in very, very efficient systems that can manage risk and reputation. We should be able to do that for capital markets. We should be able to have capital markets that have the same level of reach, scalability, and long tail, and allow just radically more open access, both for businesses and individuals all around the world. That should all be possible, and we can see, again, pick your time frame. It seems like we're inevitably working our way towards that. So I think, yes, ultimately very disruptive in the same way those are. I think, unlike these other industries, though, this is the most sharply regulated industry in the world.
Yeah, and I agree with everything Jeremy said. Going to Wall Street early in my career, everybody started talking about market structure, all these different components of how Wall Street's engineered, how it runs, all that stuff. I think the market structure of Wall Street is going to get disrupted in a major way. The 600 trillion of global assets, just real world assets, whether it's a hotel, a bar of gold, a cap table, whatever, bonds, commodities, whatever, is all going to get tokenized. And but the way those tokens are going to run and behave and how they're going to be managed with new wallets, new exchanges, new custody platforms, all that market structure, all that infrastructure is completely brand new. And I think it's going to be very disruptive in certain ways where there's going to be some resistance to that or some adoption of that, and there's going to be new incumbents. And then actually it's going to look a little blurred because you expect Wall Street to do this, but Wall Street's not going to do all this. You have big tech looking at the same thing, and they're saying, well, banking is just like a software layer. And so that's going to get really interesting. And so you have real world assets getting tokenized, liquidity, price discovery, all these benefits that we'll see in doing that. And I think that will actually help institutions adopt crypto because they understand these assets. And tokenizing them, it's like securitization or fractionalization 2.0, 3.0, whatever. So that is great. But I think the really amazing opportunities here in terms of like just industrial organization, forget about market structure, is how tokenized digital cooperatives, where you contribute to a cooperative and then you get something back, and the incentive structure is this token, that's really powerful. And how these new ways, whether it's distributed compute or distributed Uber or all these different things, I think that's the most profound part of this equation. I think tokenizing assets and all that stuff is just going to happen, and people are going to take fees and do that well and get to that point, and then it's going to have this whole set of new unintended consequences, whether it's AI and all these things that compose new asset classes or new portfolios or new ways to engage. I think that's going to be yet a whole nother phase of pretty cool disruption.
Having been part of building a digital asset bank, I would agree, bank can be a software, but a highly regulated one. So, okay. With regards to the disruption aspects, I think it isn't there yet, but it has started, and I see it from several observations when talking to the banks these days. For example, when I talked to my banking clients 4 years ago and asked them about Bitcoin, they looked at me like I had smoked something before I entered the room. And then until 2 years ago, the questions were, okay, well, Bitcoin, what's the intrinsic value? And then I said, okay, what's the intrinsic value of US dollars? And then, well, it's US economy. Show me the formula. So they had those discussions about the fundamentals and how to evaluate, how to look at it. And now, when I talk to banks these days, you find the the quality of tokenization has reached a different level. And so people did their homework. Not everywhere. 5 years ago, a lot of banks were experimenting with blockchain down in the basements and lab somewhere for settlement solutions, something. But now it's getting connected with the market functions also. You see that happening. So they seriously see this coming, and some banks are faster and some are slower in preparing for that. On the other side, coming back to institutional money getting into the space, what I also do observe, and this is a very interesting observation, how asset managers look at Bitcoin as an asset class. I'm saying Bitcoin. I'm not saying Ethereum. I'm not saying Ripple. I'm saying Bitcoin. And this is happening. 2 years ago, you saw models, evaluation models being discussed because investment managers always need a benchmark to compare with before they can invest. Until a year ago, half a year ago, the main model being discussed was, okay, what's the production cost? So what's the mining costs and all the costs I have? How do I evaluate the fair value? But now you see it moving, transitioning into the stock-to-flow model, which is becoming more and more popular, which makes a lot of sense if you look at it from an aspect as digital gold. And you see the spreading amongst global macro managers in particular, some of those being skeptical in the past, now kind of promoting it and seeing this value of the stock to flow. And I think that this is also where disruption will be happening, and we might see also a couple of other areas.
Yeah, I think it's the blockchain technology really improved the efficiency and the transparency of the financial system. Let's take China, for example. China is going to issue its own digital currency, right? It's happening. It's going to change completely the whole financial system in China, right? Back to 20 years ago, you're going to use cash, right? 10 years ago, you are using the WeChat Pay, Alipay, right? And in the future, along with the cash, credit card, WeChat Pay, Alipay system, you're going to have a blockchain payment system, same QR code, but it's significantly improved the efficiency and the transparency of the money flow. So I think in the coming future, you will see this technology as being used in the world leading economy, and you see how it improved the daily life.
Yeah, so I think I agree with all the panelists that it's truly disruptive. There's a reason why incumbents, Wall Street, regulators are all pushing back, because they are threatened and they feel like they're going to be, they're going to be disrupted, right? And the concern that I have, like when you look at the innovations dilemma, right, where incumbents always go to the far right or the top right, and the new entrants who might have an inferior product, an inferior technology, but they're able to go to the mass market and they can grow and eventually take over. You almost see in any innovation that it's not the incumbents making that change and going to that next level of innovation. I think my concern is with all the regulators and the incumbents, because it might potentially wipe out the existing structured Wall Street and the global financial ecosystem. No one wants to be disrupted, right? Because it's their lives. You don't want that much transparency because that's where you make money. So when an open system can potentially change that means it has unbelievable disruption. The problem is, can the entrepreneurs, can us as startups make a dent when now you need capital? The cost to maintain and operate an exchange, we're starting to become a regulated exchange where you have to have surveillance system, NASDAQ system. We have to put all these things in, and these are fixed costs that are very difficult to, unless the market continues to grow. So again, I'm looking at it from an exchange perspective. But even when you look at global exchanges, like traditional exchanges, commodity exchanges, they're so ripe for disruption. The problem is now with all these regulations and frameworks and enforcements that come in, that we have to become one of them in order to survive. And then where does that disruption go? So the potential for disruption is there. The problem is who can be that catalyst to push it through. Right.
And we saw a little bit of this in the early internet too, where it's just a cheaper delivery model, and then pretty soon you have this massive amount of M&A going on. Like startups with two guys and a dog were getting bought for $100 million, And then you saw it in cloud too, where SAP and Oracle were like, it's just a cheaper, easier delivery model, cloud, no big deal. Now SAP and Oracle are cloud companies. And after $100 billion of M&A. And so I think this industry is still kind of in its early days, but pretty soon, the big banks, big tech, is going to favor some of the innovations, some of the go-to-markets that this industry has, and is going to wind up kind of boxing against certain players, acquiring other ones, and so it's going to get interesting. But I think that's on the horizon in front of us.
Right. Thank you all for your answers. A big round of applause for our panelists, please. Yep. Right. We have come to the end of the panel. Yep. Thank you so much for your time.